Hello, traders. Welcome to this week's Stock Profit of the Week update. We are going to discuss Shopify stock. Why do we see Shopify as the profit of the week? Shopify makes a significant policy shift ahead of earnings, rolling back its pandemic-era revenue sharing exemption. The change means developers only receive fee exemption on their first $1 million of lifetime revenue, replacing the previous annual reset system. This adjustment potentially increases Shopify's revenue share from established developers. As investors await Shopify's Q1 earnings this week, the focus turns to how this policy adjustment might influence financial results. While earnings before January 1, 2025 don't count toward the threshold, the change signals a strategic shift in platform monetization that could impact future revenue streams. The developer community's response highlights potential ecosystem challenges. Many express concern about the timing, particularly as merchants already face cost pressures from potential tariffs. Some developers question the rationale, suggesting the annual cap wasn't simply pandemic support but a competitive advantage for Shopify's platform. VP of Product Glenn Coates explained that the annual reset primarily benefited a few hundred established partners rather than the tens of thousands of smaller developers. This strategic rationale suggests management is prioritizing broader ecosystem development over maximizing support for top-performing apps. The upcoming earnings report will provide crucial insights into platform economics and growth strategy. Analysts will examine whether this revenue model adjustment signals a broader shift in Shopify's approach to monetization and how it might influence App Store dynamics and developer engagement. Now, let's go to the chart. Looking at Shopify's daily chart, #shop, the stock is currently trading at $99.20, having established key support levels at $93.85 and $87.62, with resistance levels defined at $103.95 and $110.80. The price is experiencing a recovery attempt after a sharp decline, with recent price action showing some stabilization near the $99 level. The 20-day moving average, red line, still trends downward but is beginning to show signs of reversal, which could indicate a potential shift in momentum. Key levels to watch include immediate resistance at $103.95, which represents the first major barrier. A successful break above this level could target the more significant resistance at $110.80. On the downside, the critical support at $93.85 needs to hold, with $87.62 providing additional protection if selling pressure intensifies. The stochastic oscillator is moving lower from overbought territory, suggesting potential for consolidation in the near terms. However, the overall technical structure remains challenged, and price action around the earnings announcement will be crucial for determining the next directional move. As always, remember to implement proper risk management strategies before entering any positions, particularly given the upcoming earnings announcement and recent policy changes that may impact the company's revenue model. That's all for today. See you in the next analysis video.